Let's switch over to talk about oil. It's had its worst day yesterday since 1991. You are an investor in the sector through this Occidental Petroleum
Right.
deal from last year. You put in $10 billion,
Exactly.
I think, and maybe some more after that. I know you get preferred dividends, but that investment has to be underwater at this point. And what's your thinking?
Well, the 10 billion is a preferred stock with warrants, and there is no market in it.
Okay.
I mean, no, it's a private deal. But we also have about 2% of the common stock, and that's down significantly. And you know, as I said when I did it, I mean, the biggest variable is the price of oil, and I don't know the price of oil, and every day it gets quoted. And today it's, you know, quoted at whatever it is on WTI, maybe it's $33 or something like that. And now it's going back into what they call contango, you know, where the far out sells at a premium, where it was in backwardation when we did the deal, and the far out was at a discount. But there's still, you know, if you have an opinion on oil, you can buy or sell oil either 1 year out or 2 years out or 3 years out or something of the sort. And when oil was in the 30s, there's a lot of agony in the oil patch. And the math just changes terrifically. I mean, it just doesn't pay to drill in a lot of areas. And the Saudis can turn out a lot of it with practically no operating costs, or, you know, I mean, they've got very, very, very cheap operations.
I mean, between that war between the Saudis and the Russians, and then also perhaps the secular decline of demand given concerns about climate change, is this really a great place to invest?
Well, I don't think the secular demand will change that much, but certainly the immediate demand has changed. I mean, the airlines need less, and people drive less if they're working out of their homes. And I mean, you can change, you know, when you're talking about something close to 100 million barrels a day, if you change it by 5%, you know, that is huge. If everybody wants to keep producing what they were before. And it's, you know, it's what they call the marginal barrel that determines price. When I took economics in school, they used to talk about the marginal mine in gold, and that was a very big deal. And my professor said that he wanted to buy the marginal mine. Somewhere over in Africa, they have a little tiny mine, and it would have a big sign that said marginal mine, and the whole world would watch it. Well, that's what we do with oil, except we're talking 100 million barrels a day. And small supply or demand changes can have a very disproportionate, well, it's an appropriate change in price. And it does correct itself over time. I mean, you know, there's that line that the solution to $25 oil is $25 oil. I mean, people quit drilling then, and that doesn't affect the Saudis much, because they don't have to drill to turn up production that much. But if you get into the shale projects, I mean, the math really changes on them depending on prices.